Welcome back, everyone. Today, I've got a very special guest. As anyone who's been listening to this show for a while will know, I'm really trying to improve my privacy. It's not something that's very easy, and it's something that has taken a lot of time, but it's so important. And today, I'm joined by Chris Belcher. Chris is one of the leading devs in Bitcoin privacy. I'm absolutely honoured to have him on the show. He has worked on JoinMarket, Electrum personal server, and now CoinSwap. We talk about how all these different technologies can work together and how they can help people's privacy. And we talk about why privacy is so important in the first place. Before we dive in, I'd just like to say thank you to my sponsors, CoinFloor. And for anybody who would like to buy some Bitcoin, maybe you haven't bought yet, maybe you hear me talking about this dollar cost averaging and you want to dip your toes in, even if it's a small amount, you can click on the link in the show notes. It will take you straight through to them. And if you want some more information on CoinFloor, you can listen to my episode with Obi to find out a little bit more. If you are going to buy Bitcoin from a KYC exchange, it better be a good one. CoinFloor have proven themselves over the last 6 years, and I truly believe they will continue to. So thanks again to CoinFloor, and thank you to Chris Belcher for coming on the show. It's been amazing chatting to you. Welcome, Chris. Thank you very much for joining me. It is an absolute pleasure to have you on the show. For anybody who doesn't know you yet, could you just do an introduction, please?
Hello. Thanks for having me. So I'm a programmer, and I'm interested in Bitcoin and especially Bitcoin privacy. And I've been in the space for a couple of years, and I've got a couple of open source projects. And just recently, I've written up the design for a new one, which I'm sure we'll get onto a bit later.
Excellent. So the projects you've been involved in before, to my knowledge, are JoinMarket and Electrum personal server. Am I missing any there, or are they the two main ones before CoinSwap, which is the new project you'll be working on?
Yeah, they're the two main ones. I've had a few other things I've made, but they never really caught on. I don't think anyone used them. But yeah, JoinMarket and EPS is the ones I'm most known for.
And can you tell me a little bit more about, so I have an understanding a little bit about JoinMarket and how that works, but and a little bit on Electrum personal server, but could you just explain sort of how they are different than the competition, certainly JoinMarket, how it differs?
All right, so JoinMarket is a way of creating CoinJoin transactions. I can explain what they are. I don't know how.
That would be great.
Okay, so what is CoinJoin? So right now with Bitcoin, every transaction is it's visible to everyone on the network. So it's visible that if you have a coin on a certain address and you make a transaction, that coin will go to another address or more than one address. So that means there's a lot of privacy being leaked. So for example, if I pay someone with a coin, then I can see later where they spend that coin and in what amount and what time. Now, CoinJoin is a way to try and remedy this problem. And it's what it essentially is where multiple people come together to create one transaction. And the important thing is that they both contribute inputs to the transaction. So they both spend the coin together. And usually they get outputs as well. So they get coins coming back to them. So JoinMarket is one way of doing this. It was the first widely used CoinJoin implementation. And the way it works is, so I mentioned CoinJoins are when multiple people come together to make one transaction. The key insight with JoinMarket is that there is a marketplace. In the technical terminology, they call it a liquidity market, which is where if one person wants to do a CoinJoin for an amount they want, so suppose they want to buy a coffee with Bitcoin or something like that, they can do a CoinJoin straight away, but in order to have that privilege of choosing what the time of the CoinJoin is and what the amount of the CoinJoin is, they'll have to pay a small fee to the other people who are in the CoinJoin. And they're called the market taker because they take liquidity from the market in a sense. And the other people are called market makers. So they also take part in coin joins on JoinMarket, but they can't choose the time it happens and they can't choose the amount. And because of that, they earn a small fee. And this, because there's this marketplace, it means that using JoinMarket, you can, if you're a taker, you can always do a coin join at whatever time you want for whatever amount you want. And this is, and on the other side, if you're a market maker, you can earn, if you have Bitcoins, you can earn a small income from them. You'll get a few hundred or a few thousand Satoshi every so often.
So that's cool. So you can actually get a little bit of yield from what would otherwise, I suppose, be in cold storage for most people.
Yeah. So it depends on, JoinMarket works well because there's a lot of Bitcoins out there that just sit in cold storage.
And what's the general sort of percentage that people will be earning on something like that? Is it very competitive or?
Yeah, it's quite competitive because if you're a market maker, you also get a benefit from mixing your own coins almost for free. Like you actually earn money by mixing. So if someone has coins in cold storage, which that there's no downside to them being more private. So a lot of people put them there just for them to be mixed, which means generally the yield, the percentage yield is quite low. And another reason it's quite low is because this system is very close to riskless. So your coins are never in anyone else's possession. So there's no lending or borrowing, or you're never in a situation where someone can steal your coins. At least the risk is very, very low. So that also makes the yield very low. However, if you think about it, that because Bitcoin has a fixed upper limit, there'll only ever be 21 million Bitcoins. Even if you earn a really, really small amount, it could still be worth it. So if you compare it to another, like a fiat currency, pounds or dollars, maybe if you put them in a bank, the interest rate will be higher. But because the central banks are constantly inflating them, you sort of have to put them in a bank account. Otherwise, their value will be eaten by inflation. Well, with Bitcoins, that's not necessary.
Yeah, that makes a lot of sense. And so JoinMarket is something I'm looking to dip my toes in with. It's something I've been a little bit scared off from, to be honest, because I know that it's maybe not as simple as Samurai or some of those, but it sounds like it is the best option out there to me.
Yeah, well, there is. I think. Okay, I suppose I'm a bit biased. I think it's the best because of this liquidity market idea, which the other options don't have. However, there's a trade-off there in that because JoinMarket is very decentralized, so there's no central party that. What I mean to say is the other entities, they're centralized. They can collect fees, so they actually have a business model, which means they can employ programmers and software developers and marketing people and user interface designers, and that means their product is much easier to use. While JoinMarket is a little bit harder. Like it's still, you can install it just by running one line and you still click buttons, but it is not as streamlined as something like Wasabi or Samurai. Yeah. And that's kind of, I suppose, a close comparison might be between the Linux operating system and Windows. Like one is run by a company and one is an open source project. So the Linux is generally a bit harder to use.
Yeah, I actually had OpenOms on a couple of weeks ago and was chatting through it all, and he was shedding light on all this kind of stuff. And yeah, it's interesting how that works. It's often the better product doesn't have the marketing, and it's a little bit more difficult to use, but it sounds like it's well worth doing. So you're obviously involved in JoinMarket, which is for privacy and to help privacy, and then also Electrum Personal Server. That also is a privacy improvement over using a different service. I think I'm right in saying.
Yeah, so I'll explain what that is. So the Electrum wallet, by default, when someone turns it on, it will connect to so-called public Electrum servers. So they're servers which are just out there on the internet and anyone can connect to them. And when your wallet connects to them, it will send all its addresses to that server, and the server replies with what your balance is, how many Bitcoins you have, and what the history of transactions are. And when you've done that, you've essentially ruined your privacy because this server you've connected to, they can see your balance, they can see your transaction history, and generally they'll be able to see your IP address unless you use Tor. And they're quite personal information, so they reveal a lot of information about you. So that's a privacy problem. And there's another problem, which is the verification problem, which is now these servers, you can if the servers were in, they can do an attack. If they were in cooperation with some miners, they could make it seem as if you got paid when you didn't. So for example, suppose you're using Electrum as a merchant and you're selling, I don't know, you're selling coffee, let's say. Maybe coffee is a bad example. Let's do something more expensive. Suppose you're selling a house, you're selling some land, and someone comes to pay you with some Bitcoins, and it looks like you look in your Electrum wallet and you see, okay, this much money has been actually transferred to your account. And you say, okay, great, here's the keys to the house, off you go, that's that. And then you turn around, and after a few blocks later, your transaction has disappeared. So essentially, you've been stolen from. You thought you got paid, but actually you didn't. What's happened there is the person paying you, he controlled the Electrum server that your Electrum connected to, and he had some mining power. And he made your wallet think that you got paid when you actually didn't. That's the verification problem. And the way to solve that is, so the most secure form of a wallet is one which is backed by a full node. And a full node is it's kind of the fundamental Bitcoin software. It's a node, and it checks all the rules of Bitcoin. So it checks things like whether every coin has been spent and the person actually knew the private key, so there's a valid signature, or it checks that no Bitcoins have been created out of nothing, except for miners, or it checks that no Bitcoins have been spent twice, and all those kinds of rules that make the whole system work, they're actually verified in a full node. And because in my previous example, the Electrum wallet wasn't a full node, it could have this security attack. It could be cheated. So there's this analogy I like to use, which is if Bitcoin is digital gold, then your full node is a bit like your own personal goldsmith. And what they do is they check that your incoming gold, your incoming payments are actually real. So
they're smelting it down and making sure there's no tungsten in the middle.
Yeah, for example. Or another analogy is if you get paid in cash, then using a full node is like checking the security features, checking the hologram, checking the watermark, checking that it feels right and that it's not fake, checking the UV ink. The equivalent of those things is a full node in Bitcoin. So coming back to Electrum Personal Server, the thing that it aims to do is to make an Electrum server which is only meant to be used by one person, by you, by like the personal, by only one person. And that solves those two things, that it greatly improves your privacy because you're no longer sending your addresses to just some random server out there which can spy on you, and it improves your security because it's your full node that nobody else can, so that if you're being paid, then you actually did get paid. And the reason, so even before Electrum Personal Server, people could always do this. They could run their own server, but it was very, I suppose the real innovation there is the resource usage. So running a public Electrum server, you have to store the entire blockchain, and you also have to store an additional data structure. You have to store an index of every address that was ever used in the entire history of Bitcoin. Has to be on your hard drive, and that uses a huge amount of data. So the blockchain is about 300 gigabytes, and this other database is about, I think, another 100 gigabytes or so. And it also takes quite a lot of time to generate all these addresses, or the other parts of the database as well. So the thing that Electrum Personal Server does is it only watches your addresses. So when you set up an Electrum Personal Server, you give it information about your wallet, and it will be able to track only your addresses and not waste any data or not waste any resources tracking anybody else's addresses. And that means the data usage is much lower. So you can run it. It only costs about 4 gigabytes of disk space, and it's much quicker to set up and much quicker to start up. But the downside is you can only use it for yourself. You can't have other people use the server.
Okay. And so would you then, maybe you'd have a hardware wallet or something, would you then give, say, an XPub key to the Electrum Personal Server, and then that would then monitor anything coming from your hardware wallet?
Yeah, absolutely.
That links to your node. Is that kind of so it's almost like you have your node linked to your personal server, and your personal server linked to your hardware wallet or whatever wallet you choose to use.
Yeah, exactly. That's exactly right. And Electrum can connect to hardware wallets. So a lot of people use this to make sure their hardware wallet is backed by their own full node.
Okay.
Because that's another thing. So if you use a hardware wallet, if you follow the instructions of the manufacturer, you'll actually connect to the manufacturer's web wallet. And they'll be exactly like a public Electrum server, so they'll be able to see all your addresses and spy on you.
Okay. And so both of these technologies that you've worked on are to help with privacy. And so if we're to think that say someone doesn't run either of those and they go and buy KYC Bitcoins, and then they get a hardware wallet and they use the server from that hardware wallet, that then presumably could or will get shared to surveillance companies, and then it's really hurt your privacy.
Yeah. So I think it also all depends on the person's threat model. So it's who they need privacy against. So I think a lot of people here in the West, they might be concerned about like the surveillance companies tracking their transactions, but you can also have, for example, someone who's in China who doesn't mind if American surveillance companies tracks them as long as the Chinese government doesn't track him.
Yeah.
Or I don't know, someone who might just be using Bitcoin to. I've read about people using it in Venezuela or in Nigeria, and then it doesn't matter if the Americans track them because they don't mind that much. But yeah, if you want to be perfectly private, then yes, if you use these things by default, if you have a hardware wallet that connects to the manufacturer's website, then yes, then all your addresses will be revealed. And what's worse is the hardware wallet probably already knows where you live because they sent you the hardware wallet by post.
Yeah. And a lot of these, I assume, don't then go over Tor if you're using their sort of service like Ledger or one of these, and then they have your IP as well, I guess.
Yeah, exactly.
Yeah, so that's not great. So, yeah, I mean, in your talk, you said something that really struck a chord with me, which was privacy is the act of choosing what you'll reveal to the world. And I thought it was a really nice way of putting it, because I'll quite often say to people, like, you need to worry about your privacy. You need to care about this stuff because one day you're going to wish you had. And people sort of scoff and laugh and say, oh, well, what have you got to hide? But obviously it's more than that. So could you just sort of, for the listeners and for me, tell me, like, why is it that you care so much about privacy and you're dedicating so much time to building these technologies and making privacy better on Bitcoin?
So that quote you said about privacy is what you reveal to the world, that's quite interesting. I actually got that from there's a document written about 30 years ago called the Cypherpunk Manifesto, which is it's essentially about protecting, using this then new technology, the internet and computers, to protect people's privacy. Because even back then there was a fear that that technology that we could end up in a dystopian world where big institutions spy on everyone to get all the information, and that is
they weren't wrong.
Yeah, exactly. That's come to pass. So why is financial privacy important? So firstly, it's quite essential for a free market to work. So for example, with the way Bitcoin works now, all your transactions can be analyzed by essentially everyone. And if you run a business, it means that your competitors can analyze your business, or your customers can analyze your business. So you can't compete very well if your competitors can just see, how much you pay for stock, how much you pay your workers, and that kind of thing. You lose this information leverage. And also if you're an individual. So for example, if you pay your rent with Bitcoin and then your landlord analyzes your transactions, they may be able to see if you just got a raise. And then when they do that, they can raise the rent by exactly that amount. They know exactly how much to ask for. So you lose leverage there. So privacy is also essential for personal safety. If people have, if you go and buy for example, if you use Bitcoin to buy some coffee and then someone can see your wallet and figure out that you own, $1 million in Bitcoin, then they might follow you home and try and steal it from you. Or that if someone analyzes your transactions and sees that you've just ordered something online, they can steal it from from the front of your house. And if they can try and phone you up and pretend to be someone else, and they'll know exactly how much to try to scam you for. And there's already been quite a lot there's actually a list run by James Dunlop, which he calls them physical Bitcoin attacks, which is people trying to steal other people's Bitcoins. By that, I mean, it's not just a hypothetical concern that this does happen to people, and privacy is a great way to protect yourself. Because the hypothetical thief won't know how much you have. So another reason privacy is I think privacy is important. It's for human dignity. So you don't want, for example, your neighbors or someone else to see the things you spend money on. Like you should be able to privately buy things which might be embarrassing, or, for example, to donate to some charities that might be, might be embarrassing as well. Or, for example, I don't know, another example, if you work for, if you're an employee, you should be able to pay union dues without that being discriminated against you. So for personal dignity, it's important. And another thing that's important for Bitcoin is privacy goes together with fungibility. A fungibility is this property which is required for money, that every unit of the currency has to be the same as every other unit. And that would mean, so if Bitcoin didn't have this property, then it would mean that whenever somebody accepted payment, they could later find that, okay, like they could go and sell them in an exchange, and the exchange would say, aha, these coins actually came from this theft, this hack, like several years ago, which means we're going to have to confiscate these coins because they're stolen goods. And if that were to happen, it would mean people would be afraid to actually accept Bitcoin because they don't know whether they'll have their coins confiscated. And the way they'd avoid that is they'd start blacklisting coins as well. So you could end up in a situation where the only safe way to accept Bitcoin is to consult centralized blacklists. And if that were to happen, then the decentralization of the system would be destroyed. So that's what we mean when we say fungibility is an important part of, that it's a necessary property of money, just like divisibility, durability, and all the other properties.
Yeah, it sounds like without that, everything else falls apart because one of the amazing things about it is that there is no chargebacks, and there is there's no one who can get in the middle of a transaction. But if we have these blacklists, then that's exactly what would happen, and that's one of the bits of magic about Bitcoin that I think is so amazing.
Yeah, that's right.
Okay, so that kind of takes us on to your next project, and which again obviously is privacy focused. So CoinSwap, and from what I understand from reading through and also listening to your podcast with Stefan, was that this is similar to a CoinJoin in terms of it's aiming to make it more difficult for these surveillance companies to track you, but it seems as though it's better in multiple ways. So could you jump in and sort of explain the differences, please?
Yeah, sure. So CoinSwap is another privacy protocol like CoinJoin. So it's like a building block, you could say. It's a kind of transaction that improves the privacy of people who do it. And so we talk about CoinJoin as many different people coming together to make one transaction. And CoinSwap is where it's essentially a way of trading coins. So, for example, me and you, I could send you a coin and you would send me the same amount of Bitcoins, but we could do this in a way that involved smart contracts where nobody could scam anyone else. So there could never be a situation where I send you coins and I never get back money from you, or vice versa. And that has the effect of breaking what we call the transaction graph. So breaking the fact if there's an address A and B with a transaction going there, it removes the assumption that the coins actually went from A to B. So there's an example I've used in my document, which is, suppose Alice has a coin and wants to send it to somewhere else. I know, sending from A to B. If she used CoinSwap, then the coins would, for someone who analyzed the blockchain, the coins wouldn't end up at B. They'd end up in an address Z, which is completely disconnected from either A or B. And another great thing about CoinSwap is, CoinJoin is very visible, so the transactions are much bigger and they have a specific pattern that's easy to detect. CoinSwap, if it's been designed properly, can be invisible. It can look the same as any other Bitcoin transaction out there. So then, following the analogy from before about Alice sending coins from A to B, but actually ending up in Z, if there's another user we'll call Carol, who has never even heard of CoinSwap or anything like that, and she just sends a normal transaction, because her transaction looks exactly the same as Alice's, anyone who analyzes Carol's transaction will always be left with some doubt. So they'll always be wondering in the back of their mind, what if Carol actually used the CoinSwap? This analyst won't be able to tell either way. So if as long as CoinSwap exists and is used off, sometimes, then everyone's privacy will be improved, even if they never use CoinSwap.
Yeah, that's amazing. That's really amazing. That's a massive difference, and it seems that to me, I can't see how there's any downside on that. Is there any sort of worries about CoinSwap or any things that you have reservations about, or that are in some way worse than a traditional CoinJoin, or is it sort of strictly better in every way, as far as you can tell?
So it's, as far as I can tell, it's I think it's better in every way, but the downside is that it's a bit more complicated to actually create. So with CoinJoin, you these wallets or whatever they are, they connect together and they make one single transaction and it's broadcast. And if it gets mined, like, great, they will be mined. And if not, then that's also fine. You carry on. Well, CoinSwap, it involves multiple transactions and there has to be a specific sequence. So there's a thing called a funding transaction, which sends these coins into a multi-signature address. And then all the parties have to be watching the blockchain and be ready to respond. So, and there's other things like that which make it a bit more complicated. However, on the other hand, the actual protocol is very closely related to Lightning, and Lightning is even more complicated than CoinSwap, and yet people have still managed to create it. So I don't think it'll be impossible.
And so the CoinSwap implementation, is that something that you're going to try and implement so that other wallets and different developers can use this within their current projects, or is it going to be like a standalone service?
Yeah, it'll be both those things. So in the long term, I'd hope that, from my point of view, I don't want to create yet another Bitcoin wallet. I think there's enough of them out there, and a lot of them are very good. But I'd ideally like to make like a plugin or something that wallet developers can use to just add to their wallet. And then a user who has this installed can just click a checkbox that says use CoinSwap or use like whatever name it ends up being called. And then all their transactions thereafter will use CoinSwap just seamlessly and transparently. And that's like, that would be the plan. That was kind of the original plan of JoinMarket. And then there was some sort of, as we got more experience, there were some more problems discovered with JoinMarket, and it was like, I became a bit less enthusiastic about it.
Okay.
But yeah, that's the plan, that would be in every wallet so that everyone who wanted to could make a CoinSwap if they needed to.
And so, like, say, obviously this is going to take some time for you to build, and it's more complicated. So thank you for doing it. But when it is done, and say I was to do a CoinSwap with you, what you're saying is that on chain, no one would be able to see that we've done it. It would just look like a normal transaction. And is there any way for this to be tracked? I mean, like, we're obviously swapping an amount. Is it just going to be me and you, or are you saying that there's going to be more people involved and that there's a certain amount of coins that go in and then they go out, and they go out in different amounts so that it's then not trackable?
Yeah, I'll explain that. So the original CoinSwap idea, that's kind of the most basic building block, but that on its own doesn't solve all the problems and doesn't solve doesn't solve some attacks. So as I described before, me and you would do a CoinSwap, and I don't know, I'd send you 2 Bitcoins and you'd send me back 2 Bitcoins. So an attack could be there, is what we call the amount correlation attack, which is if someone is spying on my transactions and they see, okay, Chris has done a CoinSwap for 2 Bitcoins, I know he's going to get back 2 Bitcoins from someone else. So all I need to do is search the entire blockchain for another transaction, which is for exactly 2 Bitcoins. And that will narrow down the possible candidates for Chris's coins now. So the way that's broken, the way that attack is resisted, is another building block I've been calling multi-transaction coin swaps. And that's where I'd send you 2 Bitcoins in one transaction, and you'd send me back also 2 Bitcoins, but they wouldn't be in one transaction. They'd be in 3 or 4 transactions. So for example, you could send me 1 Bitcoin, and another transaction would be 0.2 Bitcoins, in another transaction would be 0.3 Bitcoins, and in the fourth transaction would be the final 0.5 Bitcoins. And that adds up to 2, if I've done my maths right. And then this analyst wouldn't be able to just search for the amount 2. So there's another building block. So that should solve the amount correlation problem. There's another building block, which is, suppose I'm Chris and I want to gain privacy and I do a coin swap with you, but what if you're actually a spy? What if because you can see where the coins go ultimately. So the way this is solved is by doing what I've been calling a rooted coin swap, which is I want to do a coin swap, and instead of swapping with just one person, I'll choose, say, 3 or 4 others, and I'll do like a coin swap that kind of goes in a route. So let's go back to the example of Alice again. So Alice is this market taker, and she wants to send, I don't know, let's say 2 Bitcoins again. So she'll do a coin swap with Bob, and then Bob's 2 Bitcoins will go to someone else we'll call Charlie, and Charlie's Bitcoins will go to someone else we'll call Dennis, and Dennis's Bitcoins will go back to Alice.
Right.
And what will happen is Alice is she's coordinating all this. So only Alice knows where the coins have actually gone. Only she knows the whole route. And these other parties, so Bob, Charlie, and Dennis, they only know the previous party and the next party. They don't know anyone else. And that would mean that all of them would need to agree. They'd all need to collude if they want to ruin the privacy of Alice. And then, right, so that's how we solve the thing of one person having a single point of failure. And then there's the problem, what if an attacker is colluding? What if there's an attack, like a surveillance company who just fills up this marketplace with lots of their own bots, and they're actually all controlled by the same person? And using that, we'll have another primitive, which is called fidelity bonds, which is a way of making it very expensive to do this attack of having many copies of bots. And I can explain that, although I've talked about it quite a lot on other podcasts, but I can do a brief explanation if you like.
Yeah, no, it'd be great if you could just run through it, please.
Yeah, sure. So fidelity bonds they're a way of having some kind of sacrifice of value in a way that sacrifice can be proved to someone else. So, for example, there is a way to send Bitcoins to a time-locked address, and then it's enforced by the network that those Bitcoins will not move. Like, they'll be unspendable for, say, 1 year or 2 years, or whichever date you choose. Mm-hmm. And then you can take that transaction and show it to anyone else and say, look, I've sent these Bitcoins and I've locked them up for 1 year. Like, you can work out the sacrifice of that. Like, it's equivalent to the time value of money. Like, I could have used this money for something else, but actually I've just locked it up for 1 year. And we can create these bots. We can create an algorithm inside Alice, which will use this sacrifice as a way to make it very costly for someone to attack the system by having loads of copies of bots, because to make loads of copies, they'd have to sacrifice a lot of Bitcoin value. So the key insight there is that the way the algorithm works, so the way you find the value of a fidelity bond is it will be related to the square of the sacrificed value. So, for example, if one of the bots sends 5 Bitcoins to a time-locked address, then the value will be 5 times 5, which will be 25. But suppose instead they split their 5 Bitcoins amongst 2 bots. One of the bot had 2 Bitcoins and the other bot will have 3 Bitcoins. So the value of one bond will be 2 times 2, which is 4, and the value of the other bond will be 3 times 3, which is 9. Now, 4 and 9 added together are 13, and that's much less than 25. So what's happened there is the fact that this person has split their money into multiple bots has given them a disadvantage in this marketplace.
Right. Oh, that's really clever.
And what that means is if someone wants to be honest, if they only want to make money, if they only want to earn interest, their best possible way of operating is to just have one bot and put all their money in that bot and just collect money by doing coin swaps or coin joins. And if someone wants to attack the system, they'll have to split their money over loads and loads of bots, and they'll have a disproportionate cost to doing that because they're not honest, because they want to spy on people.
Right.
And that's
so
the key
like
thing
an
of how
incentive structure, and the more you want to do it, the more costly it's going to get. So
yeah, exactly. Yeah,
drive out that bad behavior. Right.
Yeah.
Okay.
And you can do the maths of this. I've done some analysis. There's a document called the Financial Mathematics of Fidelity Bonds, and it turns out if you use the realistic numbers, which are like advertised in JoinMarket today, it ends up costing something like $500 million in Bitcoin would have to be locked up for 6 months. And that ends up being like a really big sacrifice. If you had 500 million, that's like, governments have that kind of money, or corporations.
Yeah.
So it's a really strong. I was actually surprised of how strong the whole thing works, because it's not actually that much money that's in JoinMarket. It's a normal amount of money, I guess.
Well, that is massive money. I
Yeah.
guess the only way really that something like that would happen, that I could think of, would be like if all the exchanges decide to collude with all of the surveillance companies, and then they have some sort of agreement to lock up all of their funds over
Yeah.
time. Then maybe, but then it's not really in their best interest, because if I almost see it as like, if they do succeed, then Bitcoin fails.
Yeah, and also, what if their coins have been locked up for, say, 1 year? What if they have to? What if all their customers come and ask for their coins? Like, what if there's a run on the exchange? Then the exchange is in trouble.
Yeah, so that's the cost you're talking about.
Yeah,
Yeah, that's really clever. So it's sort of, it covers all those bases. And is there anything that you're still working on where you can see attacks happening, even if they're very low probability? I mean, obviously that's still possible. It just, they're not incentivized to do it.
there is an attack with fidelity bonds, although. So I'll explain what it is. I've talked about how there is this incentive to lump all the coins together in one bot. There's one possibility, which is that many different people put their coins in one bot and then just run one bot instead, and they'll have a bigger advantage if they pool their money together. And the effect of that would be that, like, suppose there's 5 people, instead of them running 5 bots, they're just going to run one bot, and that bot it'll have a very big fidelity bond sacrifice it can show to people. But the downside would be, instead of having 5 bots, we just have one bot. So there could be less privacy there because the amount of bots is lower. That's kind of the trade-off, that if you have an incentive too much that people lump together their funds, then the number of bots will go down. And if you have an incentive for people to spread out their money too much, then the system becomes too easy to attack. So there's kind of a trade-off there. And I don't know. I guess it will be okay, because even if 5 people have put their money into one bot, it's not that 5 people know the privacy relevant information. The only person who knows the privacy relevant information is the one who actually holds the money at the time. And also, I suppose they don't really have they don't really have a reason. If they just want to make money and have their Bitcoins grow, it's not like they're going to sell the data around. So that's possibly, I don't know. There's debates on this on the Bitcoin developers mailing list, so you can see that that's kind of one. That's sort of an inherent problem with fidelity bonds.
Okay. And with the CoinSwap, is there? I saw in your talk, in these sort of questions afterwards, someone was asking about wallet fingerprinting, and whether that would be an issue. And I think I remember you saying that obviously different wallets use or give different fingerprints. Is there some sort of clever way that can be tackled, and that maybe these wallets would sort of jumble or tumble the way that they create these transactions? I'm not sure exactly how to word it, but to make it so that people wouldn't know, for example, that it's from this wallet or that wallet. It could be any.
Yeah, I think the most... so wallet fingerprinting refers to how there's a lot of other information in a Bitcoin transaction. So there's this nlock time field, and there's another one called nsequence value. And there's also fingerprinting related to where wallets get their miner fee information from. So, for example, on one wallet, it might say the best miner fee is 20 satoshis per byte. Another wallet might say 25 is the best number. And that can also leak. If someone's looking at a transaction, that can also leak which wallet maybe created it. So I think there's a thing. I think probably the best way to do it there is to have this CoinSwap application study all the other wallets and then randomly choose which of them it's going to pretend to be. So, for example, if it knows that 20% of the network of the transaction has been created by Electrum, then 20% of the time it's going to, as close as it can, copy Electrum's transactions. And I don't know, 30% of the time it can pretend to be blockchain.info, and then 40% of the time it can pretend to be Bitcoin Core and that kind of thing. So hopefully I think that's the best way to deal with this wallet fingerprinting issue. There is also a thing. So you must be aware of there's the change address idea, which is if you have a coin in Bitcoin, suppose they have a face value, like suppose this one is worth 10 Bitcoins. If you want to send 4 Bitcoins to someone, the way it works is you can't just send 4. You have to spend the entire 10 Bitcoins, and then 4 Bitcoins are sent to one address, and the remaining 6 are sent to the other address. That's like the change. And if an analyst can figure out which output is the change address and which is the payment address, then they get a lot of information which is relevant to privacy. So a thing I've been thinking to do with CoinSwap is intentionally break these heuristics. So ideally you could sometimes trick the analyst into thinking that the change output is actually the payment output and vice versa. Okay. And then if they're analyzing, okay, so for example, there's a few change address heuristics. One of them is suppose I have a coin that's worth 2.5678. Like it's got some, lots of random numbers. Of just because that's how money works. You sometimes end up with odd values, and then I see I see that's being spent, and the transaction is spending to exactly 1 Bitcoin, and the other output is spending to, what was the thing I said, 1.23456 something Bitcoins. In that case, because the round number, because it has exactly 1 Bitcoin, you can be pretty sure that this 1 Bitcoin was the payment amount.
Yeah.
Because what happened was the person maybe had a wallet on their smartphone and they just pressed the one key and then pressed send. Like that's the natural way that people do things. That's the way they type in stuff. So there's called the round number heuristic of finding change addresses. And the way you could break that is you could intentionally make the change output be a round number. Intentionally make the change output be, exactly 1 or exactly 0.5 or something like that, and then the payment amount can be this weird looking number. And that would work in CoinSwap because if you remember, there's the multi-transaction heuristic. So if we go way back, there was I send you 2 Bitcoins and you send me back 2 Bitcoins, but spread over many transactions. Now, because it doesn't matter exactly what size of those transactions, as long as they add up to 2 Bitcoins, you could make them be any size you want. You could make them be have a weird amount and then have the change output be a round number, as long as in the end they add up to 2 Bitcoins. That would be the way I'd do that.
Okay. And yeah, I can see that. And when you were saying as well about there being sort of multiple hops and that A goes to Z and the transactions in between don't know where the transaction came from or is going.
Yeah.
Is that kind of like in Lightning? So it's almost like, would you call that like onion routing, or like where there's like a layer that's removed and you then can't see? Is that kind of how it works?
Yeah. There's a lot of similarities between Tor, like the routing of internet packets via encryption, and this CoinSwap and how Lightning works, which is routing money through many different hops. There's a lot of similarities there. So there's a whole section in the document I wrote, which is how is CoinSwap actually different from Lightning? Because both of them have routing, both of them use these hash time lock contracts, and so the main difference is that CoinSwap is fundamentally an on-chain technology in that if you pay someone with CoinSwap, you pay to a Bitcoin address, while if you pay someone with Lightning, you need a Lightning invoice. So Lightning has these payment channels, and they exist forever, like indefinitely. There'll be a channel, and you can send money back and forth many times. While CoinSwap is, it always comes back to the chain at the end, to the blockchain. And sort of the trade-off there is that Lightning is better for smaller amounts, like for micropayments, for example, and CoinSwap will be better for bigger amounts that you'd want to use on the blockchain anyway. And also, there might be people who don't want to adopt Lightning because they think it's too private. Like that's possible. We've seen some exchanges who don't want to adopt some, the so-called privacy altcoins because we think it's too private. We don't think the regulators will be happy. You could imagine them saying, "Oh, we don't want to adopt Lightning because the regulators won't be happy." But as soon as CoinSwap exists, then they won't be able to stop CoinSwap transactions coming in because they already accept Bitcoin on chain. Like they can't change that.
Yeah.
So the fact that CoinSwap it can be adopted unilaterally. So the other person you're paying doesn't even need to know you're using CoinSwap. is a big advantage for it that Lightning doesn't have.
Yeah, that's so. Obviously, like it's crazy and it's sad that all of these technologies have to be built because of surveillance companies and all the people trying to spy on us, but they do. So, do you see there being a point where sort of all these technologies can work together in a fairly simple user interface? And like, this is probably going to sound kind of stupid, but is it possible that there could be like a piece of hardware or something that people could buy, and let's say that um, let's say they bought their Bitcoin on Bisq, and then they can just kind of press a button and it runs their Electrum server or something similar. It runs their node. It runs it through a coin join, and then maybe opens a Lightning channel, sends it through. You were talking about this atomic multipath payment AMP thing, and then through a pay join, so that like it's just like ultimate. It would be so difficult to track that these surveillance companies just have to give up. Is it ever going to be possible to do something like that, or did I just talk a load of nonsense that doesn't make any sense? You
I
can say
think what
yes.
you've asked is, will we eventually win the privacy battle? And
Basically, yeah.
I think yes. I'm kind of optimistic. I think the that there's a lot of technologies we can think of that really improve Bitcoin's privacy, and I don't know if I can see how the surveillance companies can keep up. But there is a thing that they only work if people actually use them, and I can imagine someone like in, I don't know, someone in let's say someone who just wants to use Bitcoin to speculate because they'll say their number's going to go up, and then they buy it and they don't even withdraw it from an exchange. They just hold it on an exchange, and that's that. They'll probably never use privacy, like unless they get in trouble, unless, I don't know, the exchange starts stealing their money and that kind of thing, then they'll want to withdraw it. But for people who really need Bitcoin, like now, today in Venezuela or in some other countries, there's a list of countries somewhere where Bitcoin is already banned. I think they'll end up using this just because they have to, because they know that if they don't use it, then they'll get caught, or because they need to use it to get around the government censorship there.
Because it can be life or death for some of these people, right?
Yeah. So I'm kind of more optimistic. In a sense, I think Bitcoin is more for places like that. It's for where people need to use it to resist some kind of authoritarian system.
Yeah.
Well, people in the West who just speculate, they're like, that's nice, but it's not. I don't see that's what Bitcoin's for, in a way.
Definitely. Well, it's not for that. They're just speculating that it could be used for that and other things, so they think the price is going to go up, but it's not really for them, I guess. And is that I know that the Human Rights Foundation have created a fund or a developer fund for you, and I don't know if there are other people involved as well, but I assume this is why, because they understand how important privacy is, and they're trying to push that forward. So could you just touch on that and how that came about?
Yeah, so that's the impression I got as well, that they're interested long term in using Bitcoin to help people in authoritarian countries to have to be able to use. So the way I've had it explained is that money is a form of free speech, that if you have money, you should be able to use it in ways that don't without being punished after the fact. So, for example, if you're in an authoritarian country and there's like journalists operating, but the government doesn't like them, maybe it shuts down their offices, it shuts down their printing presses or something like that, their blogs, and denies them funding, like stop people advertising with them. You could maybe use Bitcoin to donate to journalists, or buy the newspapers of the journalists, or buy access to their websites using Bitcoin, because their government won't be able to stop that. And that's the impression I got with the Human Rights Foundation. Or, I mean, it wasn't that example, but that's the kind of thing I imagined it that way in my head. So, yeah, then you definitely need privacy, because suppose I'm a journalist and I don't know, covering some corruption or something else, like I don't know, what's going on in the world today. There's China is running camps for some of its minority, what they call again. There's a minority population in Xinjiang, Uyghurs, I think.
Yeah, there was the foreign minister was like on the news, just flat out denying it the other day. I don't know if you
Yeah,
saw that they had like video of these what can only be seen as concentration camps, and he's just like, nah, just I can't remember. He said something like, "Oh yeah, that area is beautiful," or something like that, and just completely
yeah.
avoided it.
I actually saw that. That was quite grim. But
Horrific.
then, okay, suppose if you're a journalist and I don't know, you've got you're running this website and it wants to tell the world about what's going on in China, but you need to eat, right? You need you need to pay your bills. So you can accept Bitcoin. You could either accept donations or you could sell access, like have a paywall to your blog or any other kind of way, and then use the Bitcoins to pay your bills. That would be something that Bitcoin's for, essentially. But then if your privacy is ruined, if the Chinese government can send you some Bitcoins and then use that to find out the rest of your wallets, then they'll just find out where you live and catch you and send you to prison, right? So
Yeah,
in that case, privacy is very useful there, and I guess that's what HRF is aiming towards. And then I also got a grant from Square, and I guess that's slightly more mundane, is that I think they just they think Bitcoin will be the future and they want to get in on the ground floor and they want to support developers working on it. But
yeah.
of
Well,
course,
that's
that's
so
welcome
cool
as
that
well.
you've got. It's so cool that you've got this sort of stuff happening now, and that it's becoming more and more obvious to people just how important privacy is. So that's definitely that makes me feel confident and excited.
Yeah, yeah, it's useful because previously when I'd work on JoinMarket and Electrum personal server, I'd accept donations in Bitcoin if people want to fund my work. But then when I didn't have the money, I do programming things which are not related to Bitcoin, just coding something, right? Because I needed the money at the time. And then with these grants, it means I won't need to do that. I can work on this stuff basically full time, which would be quite nice.
Yeah, that's amazing. So it sounds like you've got your work cut out with putting all this, making all this happen, and making CoinSwap a reality. Do you get time for much outside of Bitcoin? I mean, do you have any hobbies outside of this, or are you just coding away all day to make it happen?
Yeah, these are quite like just I don't know mundane stuff, going to pubs and like hiking and go to some museums, that kind of thing. Nothing really special. I know nothing unusual. I have some friends I like to hang out with. Yeah, that kind of thing. So what I'm doing right now with the CoinSwap is working on a very detailed design of how the protocol will actually work. So, like for example, first Alice sends this transaction, then Bob sends this transaction, then Alice sends this signature, and Bob checks it, and that all have to be perfectly like planned. Not really in advance. We can iterate how it goes, but that will be the design of it will basically be there, and then I'll put it on the Bitcoin developers mailing list so other people can review it. And then after that, I'll start actually coding the thing. I think to make it work.
And that will be sort of, no, it's probably impossible to give a real time frame, but do you have a sort of a time frame in mind, a rough idea of?
Yeah, I've got like a personal, yeah, it's more like an ambition. I mean, of course, it's hard to tell, but when I started on all this, I said 6 to 9 months, and that was back in May or June or so. So I guess now I've got like 5 to 8 months or something like that.
Okay.
Yeah, that would be until it's the kind of the minimum viable product. So that will be there'll be a software out there and it will only work on testnet and people can try it and test it and play around with it, and slowly it will get good enough and all the bugs will be fixed and it will have all the features, and then we can try it on mainnet to try it for actual real Bitcoins. And then after that we will add more, slowly add more features. Like that's the thing with software's never really finished. Even if you have very old software like Firefox or Google Chrome, it has updates all the time. Like Bitcoin Core has been being worked on for 10 years. So I'd never say it'll be actually finished, but hopefully it'll be in a state soon where it can really be used by regular people nearly.
Yeah, that's exciting. It's I was expecting you to say longer, to be honest.
Well, as I said, it's like I don't know, an ambition. Maybe I'm being optimistic. And also, this will only be for testnet, so
Yeah,
that's the thing. You don't want to. There'll of course be warnings of don't put in more money than you're willing to maybe lose at first.
yeah. the sort of way Lightning is, and
Yeah, exactly.
the reckless idea.
Yeah.
That's really exciting. And like I said to you before we jumped on, it's been really great that you've taken this call. I'm not the biggest podcast, but this is something that really excites me. And although I'm not massively technical, I'm doing my best to improve my privacy and improve the privacy of the listeners. And having you on and explaining this stuff has been just invaluable. So thank you very, very much.
Yeah, no problem. Thanks for having me.
Absolute pleasure. And maybe sort of 6 to 8 months down the line, when this stuff has been built and on testnet, it'd be great to reach out and see what you've been doing.
Yeah, because I'm keen to get as many people. Like, it's an open source project, so I'm keen to get people to really use it and develop on it in a way that Linux or BTC Pay Server or Bitcoin Core is sort of a project that's kind of out there and people can use it.
Yeah.
Like, from my point of view, it's great to get people more interested. So I'll definitely come on.
Fantastic. That'd be great. And we have actually met very briefly before at one of the BitDevs meetups just before the lockdown, and
Oh, right.
you were helping explain to me a little bit about Lightning. And I haven't been to a BitDevs since then because of all this lockdown stuff and everything. But I'm hoping that things ease and normal life starts again soon, and maybe we'll catch up there.
Yeah.
That'd be great. All right. Well, yeah. Thanks again, Chris. And I won't take up any more time. You've got some important things to build. So we'll speak again soon.
Yeah, speak soon. Thanks for having me. I'm sorry I was late at the beginning.
Oh, no worries. No problem at all.